Tesla, the electric vehicle giant led by the enigmatic Elon Musk, is facing unprecedented challenges worldwide, from political backlash to internal corporate turmoil and intense competition. Recent developments in Canada, Australia, and other global markets highlight the significant obstacles Tesla must navigate to maintain its once dominant position in the electric vehicle (EV) industry. In Canada, Tesla has found itself at the heart of controversy due to CEO Elon Musk's political affiliations and outspoken support for former U.S. President Donald Trump. This relationship has not sat well with Canadian officials or consumers, leading to a series of punitive measures against the company. British Columbia's largest energy distributor, BC Hydro, has excluded Tesla products from its EV charger incentive programs. Effective from March 12, 2025, residents seeking rebates of up to CAD $350 must select chargers, energy storage solutions, and inverters from brands other than Tesla. David Eby, Premier of British Columbia, candidly stated that taxpayers would want to throw up, knowing their funds subsidized Musk's company, showcasing the growing public dissatisfaction with Tesla's image. Toronto has also taken action against Tesla, with Mayor Olivia Chow announcing the exclusion of Tesla vehicles from incentives intended for taxis and ride-sharing programs. Mayor Chow made it clear this decision was a direct response to Musk's political alignment, emphasizing that the measure could be reconsidered if the ongoing US-Canada trade disputes are resolved. Further compounding Tesla's troubles, the company was notably excluded from the prestigious Vancouver International Auto Show over safety concerns linked to widespread protests against Musk's political stances. These protests, dubbed the Tesla Takedown, reflect a broader consumer shift as Canadian buyers increasingly seek alternative EV brands unassociated with political controversies. Australia presents a similarly troubling landscape for Tesla. Recent reports indicate that Tesla's sales in the Australian market have plummeted significantly. Specifically, the Model 3 sedan sales dropped by a startling 62% in January 2025 compared to the previous year. The downturn has been directly linked to Musk's controversial political activities, alienating a substantial segment of the Australian consumer base. Additionally, the country has witnessed an uptick in vandalism targeting Tesla vehicles, underscoring growing animosity towards the brand. Adding fuel to Tesla's fire, internal corporate instability has alarmed investors worldwide. Top executives, including Tesla's chair Robin Denholm and Elon Musk's brother Kimball Musk, have engaged in substantial stock sell-offs. Denholm alone sold USD 75 million worth of shares recently, and Kimball Musk offloaded an additional 27 million worth of stock. Financial experts and investors perceive these sales as troubling signals, indicating potential internal concerns about Tesla's long-term viability. RMIT professor Angel Zhang, a finance expert, emphasized that insider stock sell-offs often reflect negatively on company prospects. These actions have directly impacted Tesla's stock price, which has declined nearly 50% from its high point in December 2024, alarming stakeholders and fueling investor anxiety. Tesla's global market position, once unrivaled, is now under severe pressure from formidable competitors, especially from China. China represents the world's largest EV market, experiencing explosive growth driven by supportive government policies, subsidies, and a robust ecosystem of local manufacturers. Tesla initially found tremendous success in China, significantly aided by the establishment of its Gigafactory in Shanghai. Tesla's Shanghai Gigafactory, launched in late 2019, became one of the company's most strategically valuable assets, showcasing Tesla's ability to build advanced production facilities rapidly. The Gigafactory quickly ramped up production, at its peak producing approximately 750,000 vehicles per year, significantly contributing to Tesla's global manufacturing capability. Tesla's vehicles became highly popular among Chinese consumers due to their technological sophistication, performance, and brand prestige. However, recent times have seen a significant shift. Tesla now faces intensified competition from local Chinese EV manufacturers such as BYD, NIO, XPeng, and Li Auto. BYD, notably, has overtaken Tesla as the leading EV seller globally, driven by competitive pricing, extensive product offerings, and innovative battery technologies. Chinese consumers increasingly prefer local brands, which offer lower prices and advanced technology tailored specifically to the domestic market. This trend has severely impacted Tesla's growth trajectory and market share in China, forcing the company to continuously adjust pricing strategies and promotional tactics to retain its footing. Elon Musk's way of working at Tesla has always been unorthodox and intensely driven. His work ethic is famously demanding, with Musk himself known to work up to 100-hour weeks, sleeping at factories, and expecting similar dedication from his employees. While this intense management style has propelled Tesla to remarkable innovation and breakthroughs in automotive technology, it has also fostered criticism for contributing to employee burnout, high turnover rates, and frequent internal conflicts. Recently, Musk accepted a controversial appointment within former President Trump's administration as head of the Department of Government Efficiency, DOGE. This role involves overseeing and streamlining various governmental functions and regulations, a position Musk embraced enthusiastically, driven by his passion for efficiency and disruption. However, Musk's high-profile political involvement has become increasingly polarizing. Critics argue that aligning closely with Trump's administration has significantly damaged Tesla's brand image, particularly in international markets sensitive to American politics. Musk's public political declarations and affiliations have amplified calls for boycotts and triggered widespread backlash, directly influencing Tesla's declining sales figures and tarnishing its previously apolitical appeal. Investors and industry analysts now face critical questions about Tesla's future direction. Musk's increasingly stretched commitments have heightened concerns. Beyond running Tesla, Musk simultaneously manages SpaceX and social media platform X on top of his governmental duties. This divided attention raises alarms about his ability to maintain Tesla's strategic direction, operational excellence, and market competitiveness. Early investor Ross Gerber publicly called for Musk to step down from Tesla leadership, highlighting that his multifaceted responsibilities are adversely affecting Tesla's stability. Market analyst Sami Sriram reports a 30% surge in Tesla stock sell orders recently, underscoring heightened investor anxiety. Short sellers betting against Tesla have profited significantly, amassing over $16 billion due to Tesla's falling stock prices. Looking to the future, Tesla stands at a critical juncture. The growing strength of competitors, internal corporate unease, and the continuing fallout from Musk's political controversies indicate challenging times ahead. To restore investor and consumer confidence, Tesla may require significant strategic changes, possibly involving new leadership or a shift in its corporate and political stance. Ultimately, Tesla's ability to successfully navigate these global challenges and political entanglements will determine its place in the future of mobility and define the next chapter of Elon Musk's tumultuous but undeniably influential career.